I am curious, Seema, what we're seeing right now, does that count as volatility?
Well, it was volatility for a day. I think that one of the things with this CPI print is, of course, it was an upside surprise. But what happened yesterday is that there is enough ambiguity about that backdrop to enable a lot of that momentum to continue pushing equities higher. So I think the thing is that we know that there could be an element of seasonality. That's potential. We know that there's, of course, as we heard from Austin Goolsbee yesterday, that there's the consideration of what is the implication for the PCE being the most important indicator for the Fed. And then, of course, there's a part which is, I think companies, corporates are really taking a lot of notice of, which is that if you have a stronger inflation print like we had on Tuesday, a lot of it is related to evidence that you have a strong economy. So there isn't that much concern, I think, building at this stage. And it's also, look, it's very, very early days. We don't want to make any major decisions based on one inflation print. But we do know that, of course, we need to be watching very carefully on those price pressures because, of course, as you were just talking about, there could be some fairly significant implications for margins later this year if you don't see CPI continue to fade.
So what do you do with this, with something that could be volatile, that should be volatile, but that just isn't, when you talk about a rate cutting cycle that should boost stock valuations later on, but shouldn't be now? How do you arrange your equity portfolio at a time where everyone seems to be in the same boat and buying ahead of the dip?
Right, so I think you have to take a longer term perspective. I think trying to trade these numbers is just so tough. And what we're doing is we're taking a 6 to 12-month perspective and we're saying, right, we are expecting a slightly slower economy. We think that that will open the door to rate cuts, probably not as much as maybe the market had been hoping. And historically, if you have that soft landing coupled with Fed cuts, that is typically quite positive for equities. So the way that we're seeing it is we're trying to edge into some of the more cyclical trades that we would expect to do well in the second half of the year. So things like small cap, which of course have had more of a volatile period, those are some opportunities that we're trying to take advantage of now.